How many of y'all in here are new to real estate investing? 1, 2, 3, 4, 5, 6, 7. Okay. How many of y'all have done at least 10 deals? A few? Okay. Well, tonight we are talking about how to get started. This is baby steps. If you're interested in learning what to do, how to do it, this is the class for you. And so it's going to be very basic, and yet at the same time, there's a lot of people who want to get involved. And so we're just going to go ahead and dive in. So you got to lay the foundation, learn the ropes. Real estate is not get rich quick. It's just not. Has anyone became a millionaire overnight? That's what I thought. Yeah. So it just doesn't happen. It's a slow game. You have to spend time in it, but it does work. And so you just got to start by getting your involved in it, like coming to these. This is just how you get started. This is also what I did. Dive into books, audiobooks, YouTube. There's so much free content out there. Search for like real estate investing, and there's probably 1,000 books that you can read. Audiobooks. I usually I don't even listen to the radio. I turn on a podcast or an audiobook whenever I drive around. And so I don't even know what's popular music out there anymore. And so this is all I do. I just study real estate. That's where I would tell you to start. Audiobooks, YouTube. YouTube is free. You can find almost anything you want to learn on YouTube.
Yes. Do you have any recommendations on which books in mind to start reading on?
I do, but it also depends on what you're wanting to learn. Flipping, rental properties, credit financing, wholesaling. There's so many different topics. So, you can really narrow down your search depending on what you want to learn. And there's not a wrong answer here. It's just whatever you feel comfortable with. Bigger Pockets makes a great book starting off by Brandon Turner. It's a great one, but there's 1,000. Just read them all if you can, or listen to them all. I'm not a good reader. I just like to listen to audiobooks, so just pointing that out there. Tune in the podcast. There's hundreds of them out there. Watch educational videos. Again, YouTube. Y'all should be on YouTube almost daily, just listening to free information out there on real estate. Just all of it. Just soak it all in. Again, I don't listen to the radio. I always have YouTube or an audiobook playing in my truck. Of course, join the Lubbock REIA. You're here tonight. Awesome. What do we talk about? Books? Real estate investing. This is a great place to learn about real estate investing. It's all we talk about. Then going back to your question, what strategy do you like? Wholesaling, buy and hold, flipping? I wouldn't necessarily just go after all three. I try to learn a little bit of each, but really just focus on one. You can make money in any strategy. There's not a right or wrong answer here. Does everyone know what wholesaling is?
No.
No. So wholesaling is you go find a distressed property and you speak to this owner. You have a property, right? Let's say it's worth about $100,000. You are in a situation to where you just need to get rid of it fast. I come to you and I offer you 50. Okay? And we sign a contract, and so now I have this piece of paper that I'm going to buy for 50. What a wholesaler does is they go around and sell it. Hey, I got this house I'll sell for 60. It's worth 100. Does anyone want to buy it? There's no buyers in here. All right, we're going to learn how to buy properties. And so what they're doing is they're finding properties that maybe the homeowner needs to sell because of death in the family, probate, medical concerns. Maybe they don't have the money to fix it up and it needs a lot of repairs. They're finding those type of people, getting it under contract at a at a great discount, then they turn around and sell it to someone else for just a little bit of a markup. And so, you're a wholesaler, right?
Yes, sir.
Would you share like how much you make per transaction?
Now we have a bigger team, and we're a little more nationwide, so we try to say about 15 minimum for overhead costs for everybody. When I first started out, my first one was in Colorado, I made $2,500. So we get really basis is how much time you want to put in, how much you kind of live out of it, but the concept come pretty quickly with the lead program.
Yeah. So, did y'all hear him? In this example, I offered him 50, he accepted. His minimum profit's 20, so he would go around selling this piece of paper saying you can buy this house for 70. And then someone would buy it for 70 even though it's worth 100. You get your 50, I get my 20, and then the person who just bought it, they have 30,000 in equity that they can play with. It's maybe a little bit more complicated than that, but that's the gist of it. All right. Did that everyone follow? You're not necessarily buying the property yourself. You're just finding the deals, getting it under contract, and you're selling the paperwork to someone who actually has money to buy it. And you're making a spread. Buy and hold, does everyone know what that is? Rental property. FYI, that's what I do for a living. I'm with Minnix Property Management. I'm also a sponsor. You get a 20% discount off of management fees if you hire Minnix, if you're a VIP member. Just throwing it out there. And then flipping, everyone understands flipping. That's what made HGTV so popular. Step 2, step 1 never ends, just FYI. You're always learning new stuff. Step 2, you have to work on your own personal finances. How many out there have heard that you get into real estate, no money down? One person? 2, 3, 4?
I bought my first house on money out of pocket.
So you can get into real estate without any money. You don't have to have money. However, some of your exit strategies will require you to go get a loan. And who has the best loan terms? Banks. Banks have the best terms. Correct, Kevin?
Private capital has the best terms, like individuals that want to, they can get like 6%.
This is basic, okay? This is basic. Basic class.
A friend, like a friend or a neighbor or a relative that has money, that's the cheapest money.
Yep, that's true.
Harder to get, but
It's harder to get. but
Most
you
people
can
are going to be going through banks at some point in time. Some lenders, even like if you use like Pinnacle Commercial Lending for money, you can get into a property with basically no money down, a little bit. And then they have a 30-year product. If you were going to keep it as a rental, they're going to be looking at your credit score and stuff like that. They determine like your rates. We got a few lenders in here. You do need to work on your personal finances because at some point in time you will be using a bank of some sort and they will be looking at your personal finance. Okay? And so where do you get started on your personal finance? Dave Ramsey. No, I do not agree with everything Dave Ramsey says. Okay? Those that actually get into real estate at a high level don't follow Dave Ramsey. But he's great to get your personal finances under control. He has a book, Total Money Makeover. You're asking about a book? That's a great one to read if you haven't read that. So he has the 7 baby steps. Just do those. This may take some time to build up your personal finances. Another reason why you want to build up your personal finances is you get better rates. I may have said that earlier, but you get better rates at the bank. So boost your credit score. Sorry. You want to pay your bills on time, reduce your balances on your credit card, pay off your credit cards, and you want to start tracking your credit report. You can still get those free. You can use like an app, I don't recommend them, but it's free, it's easy to use, like Credit Karma. And you can really track your credit score and see what's on there. And if you find like errors on your credit report, you can actually fight to get those off. I am not an expert at that, so don't ask me how. I just know that that is a strategy to help boost your credit score. Lenders in here, what credit score do you like to see for like the best rates?
700 plus.
700 plus. And so if you don't have a $700 credit limit, that's the goal you need to be working for. So do you need an 800? You do not. You just need to get above 700. Reduce your expenses and increase your income. This is where you're gonna have to learn a little bit. How many of y'all have done a personal, like a profit and loss statement? Your own personal profit and loss statement? Just a few people. You need to know where you're spending your money, and what you need to know, like you got to treat yourself like a business. How much income is coming in? How much expenses is going out? If you can't even answer that question to yourself, what makes you think a bank's going to lend you money? And so you really got to get into your own personal finances. You need a profit and loss statement. It's simple, guys. It's just a spreadsheet that shows all your income coming in, then all your expenses going out, then how much money's left over at the end of the month. And you want to work on getting how much money you have left over to go up. And so start reducing expenses. I make a game out of it. I do it at least once a year. I list all my expenses and I go down one by one. What can I do to reduce this expense? Shop car insurance, shop property insurance, cancel subscriptions, switch cell phone carriers. Just make a game out of it. You'll be surprised how much money you can save if you just make a game and try to figure out how to reduce your expenses. Then of course, try to work on increasing your income. Ask for that raise. Start a new job. I don't know what you can do. Sell everything in the garage, reduce your income. Lenders out there, will you want to see a profit and loss statement?
Typically, it depends.
You wouldn't? Not for your product.
For fix and flip, no.
What about like traditional financing type stuff?
Bigger projects, yes.
Okay. Well, they didn't make this easy for me, but I have to upload my profit and loss statement to my bankers every year. They require it. And so I have to keep track of it. Yes.
Now, is that under the personal side of it, or is that under the entity side?
You should be tracking both.
Oh, yes. Okay.
You should be tracking both, but yes, you should be tracking your own personal finances. I know none of this sounds fun, but if you really want to get started in real estate, you're going to have to start doing it because people are going to want to see your finances. They're going to. It's just a matter of time. So you might as well start getting used to it. A profit and loss statement, they're endless amount of them. You can probably ask any bank for one, and they'll give you a spreadsheet, or you can download one off of Google. You can probably go to like Excel, and there's probably a template that you can just pick that's for a profit and loss statement. You can get one of those easy. You want to build a reserve. You need to show that you have money in the bank. This will help dramatically. It's also one of Dave Ramsey's steps, like build a reserve. 6 months worth of expenses. Banks are also going to want to see that. I understand I'm using the word banks a lot, and you can do a lot of real estate without going through a traditional bank, but if you do go through a bank, they're going to want all this stuff. So that's why I'm bringing it up. 6 months worth of expenses minimum. I would shoot for a year. That's me personally. I don't know how you feel about that, but I also just like to have a big cushion of money just in case something goes wrong. I'm good for at least a year. That's gonna take time, and you may not agree with me, but at least do 6 months. Once you've actually done a profit and loss statement, you need to start working on a net worth statement. Many lenders use that. Y'all don't necessarily look at that, but there's a lot of lenders that do look at that. Does everyone know what a net worth statement is? Yes. Confused looks. Okay. It's almost kind of like a profit and loss statement. You list all your assets, then you list all your liabilities, and you subtract the two, and then what's left over. Good example, you bought a house that's worth $400,000, you owe $200,000, so you have a net worth of $200,000, the difference. That's your net worth. But you do that for everything. Your cars, your debt, how much money you have in the bank, all your real estate, anything that has value, you would list out on this spreadsheet. And that's how you get a net worth statement. Again, you can go to probably any banker and they can provide you with one. Or again, Google it. There's 100 of them. There's not a right or wrong one. They're pretty much all the same. How many of y'all have a net worth statement? Just about half the room. So once you get that net worth statement, I update mine monthly just to see how much I'm moving. And also just to keep track and understand what's going on. And so you want to update it constantly. Do you update yours monthly, yearly?
Quarterly.
Or quarterly? There's, again, not a right or wrong answer there. Just want to just get used to tracking your personal finances. Not throwing anyone off on this so far. Is it pretty straightforward? So far, you're reading, listening to podcasts, YouTube, on anything, everything real estate related, and you're diving into Dave Ramsey and working on your personal finances. Those are the very first 2 steps. Next is building your real estate team. This is a team sport, guys. You can't do it alone. You're gonna have people in your corner to help you in multiple aspects of real estate. And so you need to start building a team of professionals. And they all come here. What a surprise. Here's a few members that you want to start looking at. Real estate agent that understands real estate investing. Uh-oh, do we have one of those? He just gave a presentation. Property manager, right here. That's what I do full time. Commercial lender, those in-house. Yes, they're just being shy, I guess. Hard money lender, right here. Right here, insurance agent, he's a sponsor, but he's not here tonight. But a great person to have. Contractors, do we have contractors in here? All the other sponsors that showed up. Title company, attorney, CPA, they're sponsors as well. So all those people that were up here along with, everyone has this on their table. This is just a list of like all of our sponsors, which are these people right here. We didn't just pick anyone. These are people that we actually use and trust, that actually understand the business. They know what they're doing. And all you have to do is pay $25 and you get a massive discount for using them. That's a no-brainer. Even on your personal home. If your AC goes out on your personal home, $25 and you get 10% off a new system. If that's what you had to do, a new AC system, That's like, how much is it? $4,000 or $5,000 easy? Easy. 10% off, that's $400 or $500 in savings. Wow, perfect timing. Yeah, I was just talking about it. All your team members you want to start building a relationship with, take them out to coffee. Have them saved in your phone so that you can actually call and text them whenever you need them. Have them teach you what they do. Like, how many of y'all understand insurance? Really not a lot of people. Sit down with your insurance agent and have them teach you what to look for. Share your goals with them so that they know how to help you. Your team members are crucial. You can't do it without your team members. Wouldn't you say, Kevin?
Absolutely. So important.
All right, now you need to start practice analyzing deals. Don't go out there and just buy a deal. Practice first. The most efficient way to become successful is to sit there and practice, go through the numbers, go analyze deals, walk properties, put numbers together, just see if it makes sense. Understand how to do the process before you actually go out and do it. And we kind of make that easy for you. We got deal calculators right on our website, LubbockREIA.com. We have a flip calculator, a BRRRR calculator, DSCR calculator, and coming soon, a price repair budget calculator. I don't know the exact name that we're going to use yet, but basically it's like a spreadsheet that you can just estimate how much things are going to cost. Because how much of y'all know exactly how much a water heater is going to cost? Probably not everyone in this room. On this spreadsheet, you just check it and it'll tell you how much it is. And so you can really just check it off and it'll tell you how much your budget's going to be. But we have the calculators already for you, just on our website. So you need to get familiar on how to use those, how to use those calculators to analyze a property. And it's going to take practice. Repair budget, actually just talked about that. It's coming soon. Actually next month, I believe, is what we got estimated for y'all. Go walk and analyze a property a week, just one. It doesn't have to be a deal. Just get familiar walking a property and filling out the deal sheet and just evaluating the numbers. Doesn't have to be a deal. If your mom's house for sale, go walk it and just plug in the numbers and see if it makes sense. You just gotta practice. Do more if you can. I recommend at least one property per week. I'm sure if you don't have a realtor, we have a realtor here that can help you get into properties to go walk them. Would you assist with that?
Of course.
So you just gotta go walk them, look at everything, plug in the numbers, and see what happens. And we probably need to do a training on over the deal calculators, but we've made them pretty simple. Anything that's yellow, that's the only thing that you touch. Everything else is automated. So you only have to touch the yellow stuff. Has anyone used any of those deal calculators from our website? You don't have to use ours. There's hundreds of them out there. So just know it's a free resource. They work just fine. And it's the ones that I personally use. I think it's the ones y'all personally use. And so they're just fine. So after all this, just studying, listening to stuff, working on your personal finances, building your team, and you're practicing. This is not just overnight. 6 months later, you've listened to multiple books and podcasts, been saving, building up that reserve, you've got a profit and loss statement, a net worth statement. You've attended all the REIA meetings, so you're becoming more educated, and you have your team built out because you've networked with a bunch of us. Now what? You may or may not be ready. Just may not be. You may need more practice. You don't feel comfortable with the calculators yet. Is this really a good deal or not? Some of us will actually help you with that. Kevin won't let you buy a good deal if you go through him. He'll help you with the numbers. Yeah. Edit that part out on the video, okay? Got it.
That's bad for business.
That's the business. He won't let you buy a bad deal. If he runs the numbers and it's a bad deal, he won't let you buy it. And if he tells you no, don't do it. But maybe you just need to get more familiar with running the numbers. Maybe you're not quite ready on your personal finances. You got too much debt, your credit score's not good enough. One good way to figure out if you're doing well is ask your lender if they would lend to you. It's that simple. And then they'll tell you what you need to work on. Then go work on that. Maybe you're just scared. Real estate investing's scary. I don't want to lose money. Don't be scared. It's actually, once you do it so many times, there's nothing scary about this. It's like anything you do, like riding a bicycle. First time you ever rode a bicycle, it's scary. But I guarantee almost everyone, hopefully everyone in this room, can probably get on a bicycle right now and just go. So it becomes natural over time. And you're gonna have team members. You're speaking with a real estate agent, your lender, your insurance agent. And if you have a good team, they will not let you buy a bad deal. They'll let you buy a good deal. Maybe you just need a partner. You're just not quite there yet. We talked about partnerships last month. So partnerships are always on the table. You can partner with someone who knows what they're doing. Maybe they have a stronger financial background to help you get into this. Maybe they have experience that you need, that you lack. And they can also help reduce the risk because they're a partner. They're going to offset the risk. So having a partner is not a bad thing. Then once you are ready, just make an offer. You're not going to win every offer out there. You're going to put in multiple offers. Probably need to practice with the contract a little bit, and your real estate agent can help you with this as well. Guess what? He doesn't cost you anything to help you. So he's almost a free tool. Most of his commissions are coming from the seller still, even though it's negotiable today. It's still probably negotiated with the seller. So if you're buying a piece of property, why not use an agent? Just go out there and make offers. You'll probably make 20, 30 offers before you get your first deal. That's normal. You just got to get out there and make offers. Here's one that I hear all the time, and Kevin hears all the time. I don't have money. You need a lot of money. You can't get a loan. Money is so hard to find. That's what I was saying whenever I first got started. That's actually what held me back from starting even earlier. I didn't have the money. Now that I've gotten actually into it and just dove in, money's the easiest thing to do in real estate. It's the easiest. If you have a good deal, money's there. It's just sitting there. You just got to know the right people. And they're here in this room. Money's the easiest thing. So if you're afraid about money, forget about it. That's the easiest part of this whole real estate investing journey. You don't know what you're doing, you have no experience. That's okay too. If you have the right team and the right people around you, again, they won't let you mess up. If you're using like Kevin for like a hard money loan, he's going to analyze the numbers before he says yes. He's going to make sure the numbers work. Your insurance agent's going to be making sure that you get the best and the correct amount of insurance. Your real estate agent is probably gonna help you with the pricing, making sure that you're not making up random pricing and you're actually got a price that's gonna sell the property. And so your team members are actually, again, very crucial. Real estate is risky. I hear people losing money, or the market is bad. Every time I hear that someone lost money in real estate, they didn't follow the golden rule, plain and simple. They got too greedy. They didn't follow the basics. And the market's never really a bad market, okay? If you can go back in time 20 years and buy a piece of property, knowing that what it would do today, would you go do it? I wish I would have bought everything I could 20 years ago. I wasn't even in real estate 20 years ago, so, and it doesn't really apply, but still, you know what I mean? Over time, real estate does go up in value. The best time to get started is now. And so prices always go up over time. And so it's not ever really a bad market. It's just, the question is, can you hold on long enough in most cases? Let me go back. So I talked about this golden rule. Does anyone know what the golden rule is when you buy a property? We've taught many classes on it. We spoke about it.
70% of the ARV months period.
That's it. It's that simple. You follow that, you'll find money, and most likely, if you have a good team, you will not lose anything. Worst case scenario is you may break even if you really screw up. You'll just break even. There's no harm in that. But you have to follow this. You have to leave enough in there to make a profit. Has anyone else heard this before, or is this new to them? Yeah. You hear this all the time. This is as simple as it gets. All right, questions for me? Everyone's a genius now. I'm so good. No questions, really.
How long have you been doing real estate?
I've been in real estate for, you start to lose count, but over 13 years. 13, 14, 15 years, somewhere in there. It's like your age. Once you hit a certain number, you just lose count how old you are, right? So that's where I'm at.
Did you ever run into a situation where you didn't follow the golden rule?
Yes. Usually on like higher priced properties, doing this golden rule is a little bit tougher. And so like on a higher priced property, like I'm talking like, making it up, like the value of the property is like $500,000. You can easily do like 80% instead of 70% and still make money. I would not encourage that unless you kind of really know what you're doing, but you can be flexible with that number just a little bit if you're really experienced and it's maybe on a higher level, higher priced property. Yes?
If you were to lose everything, start fresh, scratch, from scratch, how long do you think you would take to get back to where you're at now?
If I lost everything, I'd probably be in a rental property just because it's cheaper to rent right now than to own. I would go and really just be buying rental properties again to build up my rental portfolio. I would say it'd probably take me about 2 years to get all the way back to where I'm at. But you don't even know where the baseline is, so that's kind of hard to. I would probably buy about 10 properties a year. Let's just put it that way. And so I'd have 20 rental properties and be good. So, yes.
What kind of property would you buy?
If you have to start over.
If I have to start over, I'd go back to what I know best, which is rental properties, buy and hold. That's my strong point. Now, I do flips as well, like I have 4 flips going right now. But rental properties is what I really do, and so that's what I would focus on. And that's what I go back and buy. Single family, yes.
Okay.
Mhm.
Add on to that question, what's your opinion between single and multi? And apartments?
The only difference between single family and a multi-family, like an apartment complex, is zero. Is zeros. Just adding more zeros at the end. It's the same process. It is a little bit more complicated because there's multiple units, but the process really the same. Just more zeros. That's it. Yes.
So, in all of this, you said then go make offers. Have you, or have you run here, on those properties? Are they using software, they put in lists, are they doing expired listings?
Yep. Once you, so
What's the?
I didn't name everyone on the team list, like building your team, but you want to have like a good wholesaler or someone, like an agent that can show you good deals and really start analyzing those. And so a good real estate agent and a wholesaler like this gentleman in the back, they will find you those discounted properties that we talked about, and then you analyze them and see if it's one you want to make an offer on.
And how are the wholesalers finding the properties?
They're marketing using probably mail outs, letters, cold calling, drive-bys, social media, and they're really targeting distressed properties or someone maybe who just, it's a great question for a wholesaler. But they're marketing to find the deals, let's put it that way. Even you market to find deals. Did I just name a whole bunch of
Yeah,
probate? Yeah.
exactly.
You can go buy these lists.
Delinquent taxes is probably the best way if you wanted to try to find a deal. And then, probably like, I would say anything that's in the estate of that individual. If it says estate of an LCAT and they're delinquent in taxes, that's someone I would call.
If you don't know how to do that, or if you don't want to do that, you find people who do that and become their best friends. Yeah. So you become his best friend and his best friend, and they find deals for you. And then they'll basically call you or text you, hey, I got this deal. You run the numbers. If it makes sense, you make an offer. Any other questions? Yes.
How do you back out of an offer if you can't sell it?
That's the wholesaler. They have a contract and the language in it that if they're not able to perform, that they get to back out. And so you do need to be up to speed on the contract. I would not recommend getting into that like up front. I would use an agent to help you with the contract. So I probably would not practice creating your own contract or using random contract. Just get with an agent. They have a solid contract. But there's usually language in there that if you can't perform, then you can back out.
So, I know what ARB stands for, but some people might not. Could you explain that?
Yeah, going back to the golden rule, this ARV, that's after repair value. What is the property worth after you fix it? And so when I'm finding a distressed property, like in that example we did earlier, I offered 50. Let's do another random example. Let's say the house is worth 200,000, and I called my real estate agent. Hey, can you look this one up for me? What would it sell for if I fix this up? And it was pretty nice. He would pull up comps and he would get back to me and tell me, This one would be worth around 200,000. Perfect, that's my ARV. Okay? That's what I know what it's worth. Then I do 200,000 times 70%, and then I would go walk it to figure out how much repairs it needs. And then you minus that to make your offer. And so,
So with this golden rule, you would say it's probably better to use this rule not on properties that are currently on the market, because all of those are already at their ARV.
not all of them,
The majority are at,
most of them,
at
but you can still use this to make an offer. They may take it, they may not.
a long time ago, I checked that out. 3 agents, I went through 3 of them in 3 months, because they, after 8 offers of this, the golden rule, they all got mad at me, because like, you're offering too low. Everyone's saying no, how dare you? They stopped working.
Yeah, most likely, you're not gonna find deals on the MLS.
Yeah.
They're just not. This is why you need someone who's marketing to distressed properties like a wholesaler. Wholesaler back there, and this agent actually goes out and markets it to distressed properties, trying to find deals himself. So he's kind of like a wholesaler.
And there are realtors that specialize in investment properties. And
Yeah.
they know how to find them.
One reason why we have the sponsors that we have is because not everyone is created equal. Not all real estate agents are investor friendly. Not all insurance agents are investor friendly. Does that make sense? So the people we have that come here and that we choose are usually people we trust and do business with and are investor friendly. Yes.
We actually do a lot of marketing to properties that are on the market, deal with agents for wholesale stuff. I think it's more about understanding your ARV prior to making your offer, right? Understanding the property itself and the condition. Because like you said, some of them are at ARV, but if you take a look at pictures, understand the area, it gives you a better idea of what to offer. Because that golden rule applies to the ARV, but like he said, it might not be listed at the ARV. So if you come in with that kind of formula, it's not going to make sense. You might be taking 20% or maybe 10% of where you're at, right? So understand your ARV prior when you're making an offer, that helps us because we're not really offending people. We're more in that baseline of negotiations.
Again, I'm going to go back to practice. You need to go out there and walk properties. The more properties you walk, the better idea you understand what houses are worth. Okay? Because it's just kind of common sense. If you never walked a property before, you have no idea what it's worth. But if you walked 100 and they're all kind of looking the same, you're going to get a pretty damn good idea of what it's worth. And so you can figure it out quickly. And then you'll know neighborhoods better. Oh, this is a good neighborhood. This is a bad neighborhood. Properties in this neighborhood are usually going around this. You'll start getting familiar with this. And so you just got to practice analyzing deals, walking properties, and putting the numbers together. Then you start getting familiar with like the repair cost. I don't need a repair budget calculator whenever I go walk a property. I just walk it and I can do it all in my head just because I've done it 1,000 times. And so I was walking a property about a month ago with an agent, and he was trying to learn what I do, and so he just wanted me to go with him. And I'm walking, and I probably less than 5 minutes. All right, this is my offer. He goes, "How'd you do that?" I said, "I just did it all in my head." You told me what the ARV was as we walked in the door, and then we walked the property, and 5,000 there, needs new HVAC, there's 6,000, needs flooring, blah, blah, blah. I did the math in my head, and there's my offer. And he's like, "Man, how'd you do that?" It's just, you just get used to it. And so you gotta go practice. That's why I say practice. Because some properties won't last long if it's a really good deal. If it's a really good deal, it will not last long, so you have to be quick, which is another reason why you have to practice, so that you can do the numbers faster. And then hopefully, one day you can just kind of do it all in your head. I'm not promoting that. I should probably recommend you use a spreadsheet so you don't forget anything. Oh, that sounds right. Sorry, Stuart. Yeah.
When I first started in this years ago, I went through 100 plus properties within 3 months, and then, as I said, I went to 3 agents within 3 months, all of them within about a month, because I didn't know at that time there was a difference between investment-friendly agents and just normal residential agents. And I went through those guys, and they all got mad at me because I thought my price, which was what I thought was reasonable because I did the math, they thought it was insulting. They didn't. They got tired of presenting that to them because they're being told by the other agents that that's insulting. The other agents are being more mean. So you got to take that into consideration. That one, be willing to learn how to negotiate and be okay with having them say no to your face and walk away. Because that's the name of the game. Especially starting out, more and more.
Yeah. Don't be afraid of no. I've put out thousands of offers, been told no 100 times. That's okay. If they don't take my number using the golden rule, it's probably I don't want it. And so just stick with that golden rule. Don't try to get cute. That's when people lose money. Just stick to the golden rule. Stuart?
Bringing that up, don't be afraid to know, but if they say yes too quickly, be hesitant. Like if you give them this number and like, yeah, take it, that's great, I'm doing it. You're like, hold on. Why? Did I miss something? So always double check.
Well, you should have practiced a whole lot to where you don't miss anything at this stage. So I've literally have walked thousands of properties. I can almost pinpoint floor plans just by the look of the outside. You just get used to it. It's like your job. I don't know. You don't know what you're doing the first day that you're doing your job, but you've been there for 10 years. I mean, you're on autopilot. So you just get used to it. You have to go walk properties and practice putting numbers together. You don't have to make an offer. Just go practice filling out the spreadsheet, and you'll get better at it. Then once you feel comfortable, then you can make offers. You really need a shade. Top window right there. Yes, sir.
Thoughts on the creative finances and different strategies approaches you've seen?
I'm sorry.
What are your thoughts on creative finance and different strategies or approaches that you've seen?
Not for beginners. It is a great strategy. You can use creative financing and probably increase your profits or do some different things, but not starting off. You need to just understand the basics. That's just my take on it. Don't try to do anything fancy on your first deal. It may be a little bit too confusing. It's just my take on it. I got a question for you all. How much money do you think it takes to buy a house out of your own pocket? Besides zero. Like realistically. I know you can get into properties with nothing down. You can. That's probably not practical every time. So how much do you think it really costs to buy a property?
At least the closing cost.
At least closing cost. What does that mean?
Retail, like if we're trying to buy a house?
If you're investing in real estate using what I just talked here, using the golden rule, how much do you think you need to actually buy your first piece of investment property? Just throw out number. Closing cost. What was that? $7 grand.
Yeah, about $2,000 to $5,000.
Okay. 2,000 to 5,000. Any other guesses? 10.
If you're flipping and you're getting a hard money loan or a private lender, depending on your experience with them, they need you to bring some money to the table, so 10,000, 20,000, depending on the cost of the.
I don't know if you use Kevin.
So, yeah. And I know some lenders, once you work repeatedly with them, you can get to where you're always, yeah.
So it does does depend on the deal a little bit, but if you follow the golden rule, you should be able to roll in some of your closing costs into the loan. And depending on how you structure the contract, you can literally get in for less than $1,000. A house worth $200,000. You don't need $10,000. Everyone talks about you need 20% down to buy an investment property. That's a lot of money. But if you follow the golden rule, you can literally get in for, I'll just put it up, less than $5,000 if you do it properly. So it almost costs you nothing out of pocket to get into a property. Yes, you can get to 0 down, you can, but for the most part, less than 5. So it's not expensive to buy a property if you do it right. And this is also one reason why you have a reserve. You got to work on your personal finances, so you have $5 grand to go buy a property. That's it. Where everyone else is putting $20,000, $40,000 down to buy a property, you're buying them for less than 5.
Yeah, but you need to, the whole purpose of buying it is to, let's say in 3 to 6 months, have it back on the market and flip. So you have to have, once you've signed the contract and closed, you have to hustle to find the lender, lend you the rehab money, you have to do all that. That's where the cost comes in.
Maybe I'm not following. And so most lenders will lend up to 75 to 80%, depending on the lender. And if you bought it at 70%, you can roll some of those closing costs into the loan. And so it's not going to cost you as much money as you think it is. Am I explaining that correct, Kevin?
Yeah, the better you buy it, sometimes we'll allow you to roll some of that closing cost in there. So, if you're already at 75%, you guys are probably the same way, then, that's our cap. So, didn't buy it as well, you have to come with more money. So that's why that 70% rule is really good. If you buy the property like that, you definitely can roll some of your costs in there.
Only thing I'd add is you need reserves to cover the holding costs while you prepare it too.
Right.
Well, that's correct. So when you buy a property and it sits vacant while you're doing the remodel, that's holding costs. You do have to calculate that, which is on our calculators, FYI. It's the monthly payment you have to make while you own it, while you're remodeling it. You still have to pay your payments, your interest payments usually. You're gonna have utilities, because you gotta have utilities on the work on it. And you're gonna have like landscaping constantly, especially here. This year, landscaping was crazy. You're gonna have to mow the yards constantly. So you have some holding costs. That's what she's talking about. Just to own a property, you're gonna have to pay something monthly, but that's calculated on our calculators. Okay, and so we take account for that. Stuart, you're out of question. This is your last one. One more, and then you're done.
Oh, I was about to say a lot of the hard money lenders and a couple of banks like the Alliance Credit Union, they have programs where they pay for your purchase of the property, plus they'll also add into the loan the cost of remodel. So a lot of people don't realize that. So I wanted to do that.
Did that make sense to everyone? It may cost you less than $5,000 to buy a property, but if you buy it right and you go to the correct lender, they will lend you the money to buy it and to fix it.
And they'll lump it all together, so you don't have to worry about it.
So you're really out of pocket nothing. You just bought a property and they gave you the money to fix it, so you use that money to fix it. Then once you're done, if you're doing a flip, you list it with an agent to sell it, or you turn it into a rental property and then you refinance it into a long-term loan. So you can really get in with almost nothing out of pocket. Yes?
Is earnest money a genuine concern, or are we avoiding that somehow?
Depends on where the deal's at. If it's on the market and you're dealing with agents, expect to pay an earnest money. If you're dealing with a wholesaler, it varies so much. he's talking about is earnest money. So whenever you make an offer on a property, they're gonna want you to put something down to show that you're basically serious. That amount fluctuates depending on the price of the property. I'd probably say average $1,000, just that's a random average. That will go towards your closing cost, and so it's not like you're losing it. They're just wanting you to put something down at the beginning to show that you're serious. Some wholesalers that I work with, they don't require me to put anything down just because I've done business with them so much that they don't care. But then I've also seen some as high as $5,000 down. And so that can fluctuate a little bit. Probably not a huge concern. I would say probably average $1,000. And it goes towards your closing cost. So shouldn't, you're gonna have some money. That's what I'm saying, you have to have some money, but it's not a lot.
So you can also do an option, and that will save your earnest money. Most people do what, $100 option fee?
For
That's
10
the most
days.
you'll lose. So your earnest money, it's kind of insurance for your earnest money. And if you back out of the contract at any time for any reason, certain, maybe it's 10-day option, 7-day option, then the only thing you lose is that $100. So that's a good way to write a contract.
Is everyone-
Yeah, most wholesalers probably won't do that, will they?
It depends on the property. Honestly, if we're confident with it and stuff like that, if it's a good area, no wire or something, but we're confident with the numbers, we'll put an option.
And if you don't understand these terms, that's okay. Just get with us. We're here to help. Again, this is why you have to educate yourself. It's a learning process. I've been in this for 13 years, and that's still all I listen to in my truck. Some type of podcast, audiobook to this day, and so it's never ending. So if you don't understand these terms, it's fine. It's going to take time, especially if you're new, just trying to get started. I'm telling you, it's 6 months or longer. So, do you have time? I have no idea what time it is.
6:57.
Okay, let's go ahead and end this meeting. We can network a little bit. We have some awesome vendors here. Again, $25 and you get so many discounts. It's ridiculous, guys. She's taking payment. Go see her.